A couple of weeks ago, I made a video on leverage shares and ETPs within Trading 212. It was a kind of biased video, but I thought I did a pretty good job of covering all the elements. It was met with a 50-50 kind of response, with many people agreeing with me and lots of people who actually use them not really agreeing with me. And that's okay, because we're all allowed to make stupid choices. And as always, I'm just another idiot on the internet. I don't have any financial education, and I don't know about some of the most advanced intricacies of the financial system. But Optik, the guy who is in the promotional video for leverage shares, which I took the piss out of a little bit, he reached out to me to straighten some of the things I may or may not have said about leverage shares as a company, but also to reaffirm the risks involved with leveraged ETPs and just how complicated these instruments are.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.
Okay, today I'm joined by Optik, the product strategist from Leverage Shares. Optik reached out to me a few weeks ago after my video on leverage shares and working in different ways that you can buy on Trading 212. So he kind of came on and he wanted to set me straight on a few things. So I don't think it's that bad, but but we definitely want to talk about it. And I'd like to get a full rounded position on the company and leverage shares. So I just thought this was going to be a great idea. Welcome, Optik. Where are you coming from today?
Thank you for having me, Paul. I'm actually located in Bulgaria. I mean, it's a very long story, but our COO just happens to be Bulgarian, so we're trying to set up a small hub here in Sofia. But you know, we're basically all over the place. Our CEO and COO, they're actually currently based in the US. A few of our sales guys are in the UK. We have some business development people in Italy, and of course, we have our back office operations team in India. So we're basically all over the place. But I like to think of us as being super agile.
Yeah, that does sound like, so you all over the place all the time and moving around and stuff?
Exactly. I mean, I guess it actually works in our favor because we always have to, meet with clients, go to different events and things like that. So it makes it a lot easier when you have someone that's, located locally in Italy and he can go and meet with a client, or we have a few guys in the UK when they can, go ahead and have a chat with a broker if there are any issues, if they have any questions, if they need any clarifications on, anything legal or admin related. So it's very beneficial actually. And I think while everyone is having trouble throughout the pandemic with, how they're going to be working from home or working remotely, for us, it wasn't anything new because, we've grown accustomed to it. So I think it was, one of the things that actually proved that this is something that other companies will try to do in the future. And it's actually quite nice that we've already started doing that from the beginning.
So we'll start a little bit with leverage shares, because I do want to get to know you a little bit, because I've seen you on the Trading 212 forum. You speak very well on there. You're clearly extremely educated on there, and you know exactly what your product does, and quite a few of the intricacies of investing, and particularly investing with ETPs and ETFs. So I want to get onto you in a little bit, but just for everybody, and in your own words and not in my words, what is Leverage Shares as a company, and what are the products that are being delivered through Trading 212? I specifically talk about Trading 212 here because it's kind of the only the only product that I use. So I come at it from my level, but I'm sure you're on lots of different platforms as well. But just explain to me what Leverage Shares is all about and what the products are about as well.
Okay, sure, definitely. First of all, I'm really happy to hear that some of my posts were helpful, because I mean that's clearly my end goal. I don't want to be on there. I don't want to, spam anybody. I really want everybody to know how these products work before, they put any money into it, and they might end up holding for a longer term than, they're educated to do so. So, I mean, we want everyone to have a good experience with these products, because that's in everyone's interest, right? If somebody has a bad experience, they're not going to want to invest ever again. So that's definitely my underlying goal. About leverage shares, maybe I can just take a step back and give a quick intro. So I think I saw in your video that you mentioned leverage shares as being a relatively new company, and that's not necessarily the case. We actually launched about 4 years ago, so back in 2017, and we were the first company that introduced short and leveraged single stock ETPs in London. Our CEO, who's Jose Gonzalez, he is actually quite reputable in the finance space because he was a co-founder of Global X, which, nowadays is one of the biggest thematic issuers in the US. What happened was that Leverage Shares was actually launched under Global X. And at the time, Global X was already in the process of being acquired by a Korean bank called Mirai. And once the deal went through, obviously, it's not, part of a bank's core business model to have an issuer that's sort of, putting out leveraged ETPs. So at that point, it was decided that Leverage Shares is going to be developed independently. And that's what we've been doing since then. So in 2017, we started out initially with 12 ETPs, and they were, once again on single stocks, and it was just 2x leveraged. And today we have over 100 ETPs, I think 103 to be exact. Most of them are short and leveraged. So we have, leverage factors of 2x and 3x on the long side, and we have minus 1x on the inverse side. And, this whole concept of leveraged ETP, everyone thinks it is a new concept, but that's not necessarily the case. I mean, if you look at leveraged ETFs, which track, broad-based indices or commodities or things like that, these types of products have been, they've been out since 2006. So what we did is sort of take that same structure and apply it to individual stocks. And, the idea was to do it just do leveraged individual stocks at the beginning to sort of make a bang. But moving forward, we're definitely going to, diversify the products that we offer. So, that's how the 1X or the non-leveraged stock tracker ETPs came to be. And as we go forward, we're going to be introducing more products that I would say most investors have not seen on the European landscape.
And that was the big thing that really brought my attention to trying to cover leverage shares. And obviously there's Granite Shares as well, which were the other company that Trading 212 seemed to use for their thing. And like you said, there are 3X and 2X ETFs out there by some of the big companies. So they've been around for a long time. But one of the things that highlighted you to me in particular was that Trading 212 sort of advertised that you could now hold NEO and JD.com and some of the Chinese stocks that are going brilliantly at the moment, by the way, in an ISA. Can you explain to me how that works and why we should be holding the ETPs rather than the stocks themselves?
Yeah, that's of course that's a very good question, and I think this is a question that's obviously going to be platform dependent, right? I mean, Trading 212 is definitely ahead of the curve. So, they've been offering fractional trading, I think, from the get-go. But, the reality of the fact is that a lot of brokers, especially the legacy names, like I think in the UK, when you think about Hargreaves or AJ Bell or even Interactive Investor, to this day, they can't offer or they haven't been able to offer fractional trading. So any investor on there that's, not interested in just holding, some broad-based index ETF and wants to create his own, basket of holdings, or maybe they just don't want to allocate $3,000 or $2,000 for a single share of Google or Shopify or Amazon. This just gives them an alternative to do so with a smaller capital outlay, right? So with just, we listed these at $5 or its equivalent in both euros and British pounds. So, that helps you forego FX fees. That helps you forego the high costs. And the other thing is that you get access to these stocks before the actual U.S. market opens, right? So if there's any news that comes out before the U.S. market were to open, you can already get into a position using our ETPs because, they trade during London Stock Exchange hours. And, they continue to trade once the U.S. markets open. But, unfortunately, there is only a 2-hour overlap between the exchanges. But, I mean, that's how it is for now. And we're currently, looking into possibly speaking with some, MTFs or other exchanges that might offer longer hours trading. But the whole concept actually came about when we spoke with French brokers because, once we introduced our products to them, they were very interested in having non-leveraged ETPs because, they were having the same issues in terms of not being able to offer fractional exposures to their clients. And so they didn't want to lose out to all of these, the neo brokers that are sort of ahead of the curve and have this in-house infrastructure already developed. So this just gives them a chance to keep themselves competitive, even in the, I would say, the newer investing landscape where almost every new platform allows you to invest in any company with just a few bucks. And because the leveraged ETPs are already ISA and SIP eligible, that same reasoning applies to the non-leveraged products as well. So I guess to be frank, the underlying reasoning is going to be, okay, if, the fractional exposure isn't a big deal because your broker already offers it, or you don't care that much about FX fees, or, you're not very keen to hold it in your ISA, then, quite honestly, it's going to make more sense to hold the underlying stock. I mean, there's no way around that. But I mean, for those that are really keen and sort of, just having their ISA and keeping all of their long-term investments there, then, we just wanted to give them another alternative instead of just, not being able to get exposure to those names that are otherwise not available.
That's fair. And these single stocks, because I don't think you specifically offer any leveraged ETFs yet, any 3x, 2x, 3x?
Not yet.
Okay.
Not yet. So it's all individual stocks for now.
He said that with a little smile on his face, so maybe there's something coming there.
Like I mentioned, we're going to be diversifying into other asset classes, so it's not going to be single stocks. And I think by end of the year, everyone will see sort of the new products that we'll be rolling out.
That's fair enough.
Some of them will be able to address some of the, I would say, the biggest concerns or complaints people have been having on the Trading 212 platform, but I will leave it at that.
Yeah, the non-leveraged ETPs then, are they designed to be held long term? Do you sort of say these are probably more designed for the long term hold?
Yeah, I mean, inherently they're as dangerous as holding the underlying stocks would be, right? So it's a 1-to-1 tracker. I mean, we listed them in mid-June. So if you look at the performance since then, you can see that it tracks the underlying stock as intended without any leverage. It has a management fee of 15 basis points, which we think is fair. Most brokerage fees even have like an FX conversion fee that's, even higher than that, sometimes even 50 basis points. But yeah, I mean, if you're comfortable holding individual stocks in your portfolio, we feel that this structure is just as safe as, holding the underlying stocks. I mean, we had an interview with Financial Times and they wrote a piece on it, and we actually had a few brokerage platforms, comment on it, and a few, let's say ETF analysts that were basically, that are in the ETF space and sort of paying attention to these types of products. They saw it as an interesting product because, what you think at first is like, okay, like why does anybody need this, right? Like a single stock ETF, that sort of like kills the whole idea of diversification with a single trade, right? But then when you think about it, there are some perks to it that, that you can't get with the underlying stock. And I think I just mentioned a few of them. And even in the US, I think a company tried this structure a few years ago, but the SEC just denied it. So it's, I mean, we aren't exactly sure of its full potential. We know there's a market out there, but, of course, we're a company that, we try to look at what's going on in this, whether it's an institutional investor or a private investor. We try to see where, investors' interests are going, and we're just trying to make lives easier for everybody along the way.
Okay, so let's talk about some of the dangers, because there are dangers and risks to this. There's no doubt about it at all. And I've had a few people commenting saying that they've been holding on to, and a lot of them have been talking about 3 times ETFs, as in full broad-based index fund ETFs, which I think we'll get onto in a second, because I think we both have seen something out there regarding that. But the individual ETPs, the individual stocks, are leveraged 3 times. Please just explain to people out there how these products are supposed to be used, because I have had a lot of comments from people saying that they are long and short and long-term holding some of these products, and I don't think that's how they're supposed to be used.
Yeah, definitely not. I mean, if you look into the documentation on our website, and you'll see this with any issuer of leveraged ETFs, CTPs, these are intended to be held for a day, usually. And if if you have a very high conviction for the short term, you might hold on for a few days. So let's say if a company is, about to announce earnings, and you already whether you have exposure already in your portfolio and you want to hedge using an inverse product, or you just want to get, more exposure without allocating, let's say, you don't want to allocate £1,000, but you just want to allocate a third of that and get 3 times leverage to get basically the same exposure. That's what it's intended for, right? And it's, at its core, these are meant for active traders. These are meant for people who are going to use it. They have their indicators set up on their trading platform, and as soon as they hit the levels at which it tells them to sell or to buy or close a position, then that's what they're intended to do. Because this whole concept of daily rebalancing, I think, is something that confuses a lot of people. Because what happens is that the leverage factor gets reset every single day, so you get 3 times the exposure the following day. So what does that mean? What that means is that, for example, let's use Tesla underlying stock in a 3x leverage Tesla ETP, right? So today, if Tesla goes up 1%, the 3x ETP is going to go up 3%. That's fine. But what happens is that if Tesla were to go up 1% every single day, and let's say at the end of 10 days, it's up, let's say 10%. So most investors are going to think, okay, the 3x ETP should be up, 3 times that, 30%. But that's not exactly how it works. Because if, it's hard to explain this on a podcast, but it's basic Excel, right? So every day, once you move higher from a high base the day before, everything is more amplified, right? So what you'll see is an outperformance. So if the underlying gained 10%, the 3x ETP will have gained more than 30%. But on the other side, if the underlying were to take sort of a volatile path where it goes up 3% and down 4% and 3%, at the end of that 10-day period, the underlying might actually be flat. It may not have gained or lost anything. But in that scenario, the 3x ETP may have even lost, 5% or even more. So we're actually putting together a guide to sort of show these different scenarios, because I think it's pretty confusing for a lot of people who haven't dealt with these products in the past.
I think that has been missed a lot, particularly the daily rebalancing. And I know you can get ETFs and ETPs out there that are monthly and sometimes even yearly rebalancing. It's very rare, but what we're essentially saying here is that let's say if your stock stayed flat for 10 days, you could almost guarantee in that situation that each daily leverage reset will, compounding in a compounding way, it will make you lose money on that side, because it's just.
In many scenarios, I would say probably in most scenarios, because it really depends on the path it takes, right? So if the upticks are sort of higher than the downticks, or if the upticks are more frequent than the downticks, then you might be flat with 3x product, or you might even make some money. But generally, that volatility usually leads to some what they call decay. So you're almost pretty certain to lose money. And it's just this whole thing about the path that the underlying takes is like super important, because I remember we listed our first we came to market with a 2x long Tesla ETP, and since listing that, I think we listed that at the beginning of last year, it's up something like 1,500%. I mean, it's crazy, and it's all because of the path that Tesla took last year, right? It was just absolutely on fire, and that just shows you the power of these products. But what happens is that, once Tesla starts to cool off, then, this thing just falls off a cliff, and you can lose, maybe 60 to 70% of your gains really quick. That's why it's super important to use things like stop losses and make sure you have an exit strategy.
No, that's great. And I think I wanted to go a little bit further, because you guys don't offer the S&P 500 3X yet, but we did have a very small chat about this off camera just before, and I've seen the same thing that you have, and it did surprise me. So we've been talking about 3X S&P 500 and how people have back tested to hold it long for a long, sometimes across 20 years, and actually it's done quite well. As far as I can tell, it's done quite well. You mentioned a forum, I think it was Bogleites or something. Yeah,
there's a forum. It's called Bogleheads. I mean, if anybody has sort of a history or any experience trading with leverage ETFs, they might have come across that forum. And there's actually a few threads where they talk about trading strategies with different leverage ETFs. So there's one that's particularly popular, and that's using a 3x leveraged ETF that tracks the S&P 500. Or some people do, 3x NASDAQ. It depends on your what your priorities are, and they combine that with a 3x leveraged 20-year treasury yielding ETF. So what you see with that product is that over, I think it was, the back test goes back all the way to like 1985. So over that entire period to today, it's returned something like an average of 28% per year consistently. And the drawdowns aren't that much worse than just holding a non-leveraged S&P 500 ETF, outright. So it just shows you that, for people who know what they're doing with these products, and, of course, you have to have some sort of rebalancing strategy, because at some point they sort of start to drift from each other, right? So if you buy at the beginning, let's say, 60% in the equity product and 40% in the fixed income 3x product, at some point they start growing apart from each other, where one outperforms by a lot and the other one just does poorly. You just have to have a very strict rebalancing schedule, which is it's recommended to be quarterly for that particular strategy. But it shows you that when used for their intentions, you can definitely make money using these types of products. But of course, take everything with a pinch of salt. And these back tests, they're not always the best indicators, because as we've had this amazing bull run the last 10 plus years. But yeah, it's interesting.
That's it, isn't it? And that seems to be the case. Is the way I thought about it from my simplistic lay term was that there are more upticks in the S&P 500 and the Nasdaq than there are downticks. So bull markets last longer than bear markets.
Definitely.
And technically, even if you are on a daily rebalanced S&P 500 3x leverage shares, whatever you want to, they've got all these long titles. Technically, it should do better because there's just more bull markets than bear markets. And even Jeff Bogle did say that the only thing better than the S&P 500 is a leveraged S&P 500, because he was that confident in his index funds. I think he had it slightly differently. I think he was very much about protecting himself on the bottom, and also not daily rebalanced as well. But he had the idea. So there is definitely, for people who know what they're doing, and probably if you've got the stomach for it, and if you really understand the fluctuations of the market, perhaps you've been through a couple already. It's one of the reasons why I can't really say, oh yeah, you should be leveraging yourself, because I've never done it, and I've never lived through a market where I would need to do that yet. And I don't think I'm the right person to really talk about that. But as far as you go, what are you invested in the moment? Where are you putting your money at the moment?
This is probably going to sound super cliche, but I'm into a lot of the things that Kathy Wood is into. So I'm very much about growth stocks.
Yeah, fair enough. Yeah.
Yes, I am. I'm a big believer. I bought into Tesla, I think about 4 years ago. Still believe in it to this day.
Wow.
Palantir is one of my other bigger positions.
Yeah.
Yes, I'm holding NEO as well. The underlying stock, not our 1X tracker. And I'm definitely focused on growth stocks. And we touched a bit about these leveraged indices. I'm actually holding the Wisdom Tree 3X Nasdaq product, and I've been holding on to it for about 4 months.
Wow.
So yeah, definitely, I don't recommend anyone else doing that, but that's only because I'm super bullish on tech stocks. And it's been doing relatively well, but I have my stop losses in place, so I'm fine with taking on that additional risk.
Yeah.
So
what I was going to ask you about was crypto, and what you felt about the FCA's decision on crypto derivatives and banning them. Do you think we should be opened up to this, and would leverage shares eventually bring in something like that as well, or has there already been plans for it?
It's been discussed internally. But yeah, the decision by the FCA is definitely a huge roadblock. And to be honest, I am supportive of the idea behind the decision. I'm not sure if they, obviously they probably have personnel that are very experienced and know what they're doing. But just by pushing people away from exchange traded products or exchange traded notes or any derivatives of these crypto products doesn't mean people aren't going to trade, right? So if I can't trade a Bitcoin ETP on my normal trading platform like Trading 212 or whatever your broker is, doesn't mean I'm not going to trade, right? It just means that I'm going to open an account with Binance directly or Coinbase directly and sort of expose myself to other risks just to get the same exposure that I would have been able to get using the traditional route. So I understand the reasoning. I'm not a huge fan of the of how they went about it. And like I said, I invest in crypto myself, so I do have to use other platforms in order to get my exposure. But I mean, this is my own personal view, of course. But that's where I stand.
Yeah, it was interesting to hear, and I thought, you guys seem to be the way to go for that sort of leverage crypto trading, because there's absolutely nothing, and I think, me personally, I would do a little bit of leverage crypto, very lightly leverage crypto trading right now if I could. But in the UK here, we're totally banned from doing that now. So I have to hold on to the simple 1x, buying the underlying stock. But then again, that's not so bad either, I suppose.
I'm actually just holding on to I believe I have the Han ETF, the BTC product that they offer, and I'm just holding on to it to this day because I know that if I sell, I can't buy it back. So it's just one of those little annoying.
Yeah. Is that here in the UK that you bought that?
Yeah, definitely.
Yeah.
Exactly.
So there's a lot of people out there actually which are very similar, holding on to the Han ETF, which just explain that to people that it came in just before the ban, and we had a bit of a hoo-ha on whether it was a derivative or not, but it definitely was defined as a derivative. And it's a 1x Bitcoin tracker ETF, which is very good, and I would have held on to that as well personally. But yeah, I didn't buy into it before because I was buying the underlying ETF. But okay, nice to know that you've been holding on to that ETP as well. That's very cool.
Yes,
I think we'll leave it there, mate. I think that's very good. I think we've covered loads, and that's a lot of information for everyone. So thank you very much, Optik from Leverage Shares, for coming on today.
Paul, many thanks for the invite, and for anyone that is just finding out. I reached out to Paul because I saw his video about the 1x CTPs. I thought he made a very objective overview of the product, and I just thought it would be an interesting chat for me to be on his podcast. And I just want to say thanks for the invite, and hopefully we can do this at some point in the future. Once again,
definitely, you're a great guy. Thank you very much, Optik.